I have been with the company for 2 years, with banking total of 4 years. 2 years at Bank of America and 2 years at Wells Fargo. Thank you.
Good morning, I'm Hilda Lee with Citibank. I have been in the business for a little bit over 20 years. I started with Great Western, if anybody remember that, and then it becomes Washington Mutual, and then Chase for 19 years, and then I went to PNC Bank, and I have been with Citibank for about 8 months now, and I enjoy it. Thank you so much.
Good morning, my name is Priscilla Chen. I'm with Chase, Temple City Camellia. I have been in the mortgage industry running about 10 years. And I've been with Chase over 6 years at the same locations in Gabriel Valley. And I've been helping people purchase homes, refinance, 1 to 4 unit, primary, secondary investment, and I speak Cantonese Mandarin, and I know a lot of realtors in this area, and that's about it.
Hi, my name is Phoebe. I'm from East Bank. I've been for East Bank for 17 years, and I used to be a mortgage loan officer. Maybe many of you may know me. Right now, I'm just recently doing commercial loan. I've been doing it since last year, sometime March. So I'm very experienced. I'm in the banking business for almost 25 years. I know, give my age away. I know I was starting very young, right out of college. So anyway, I'm very experienced on commercial loan as well as even residential. So I'm looking forward to share my experience to you that it can be a successful one. Again, thank you. My name again is Phoebe. Thank you.
Hello, hello. Oh, okay, it's working. My name is Chris Hahn, and I'm with Gem Mortgage Company. I'm a branch manager there. I've been in the business for a little over 23 years now, and I focus solely on residential lending. 1 to 4 unit transactions, purchases, refinances, second mortgages, and specialize a lot in first-time buyer programs as well. That's it.
Perfect. Well, we'll get started right away with our panel discussion questions, and we're going to start with asking Chris. What everybody wants to know about interest rates, where they are right today. What determines interest rates, and where do you see them going right now?
Great question, Marcus. Thank you. Interest rates are determined by a lot of factors. In general, if you look at the overall economy, that's the first place you're going to look to see, well, what direction are rates going to go. In general, when the economy is in bad shape, as we presently are and have been for the last few years, rates tend to stay low. When the economy starts to pick up, of course, rates will pick up as well. What we're experiencing very recently, as many of you have probably seen, we've had a massive sell-off in mortgage bonds, and the closest correlation to what will actually directly happen with price has to do with the sale and the purchase of mortgage-backed securities. Many people think it's the Treasury bond that we got to watch for, and yeah, in general, if you watch what direction treasuries are going, you can kind of get an idea of rates, but the direct correlation is mortgage-backed securities. Over the last month and a half, we've had over, at this point, probably close to a 1,000 point loss in mortgage-backed security prices, and that's driven rates considerably up. Just a month or two ago, everything was in the 3s. We're now seeing it getting close to the 5s. And in some cases, depending on credit scores, it's above 5s right now. So I don't know what's going to happen exactly in regard to rates. The economy is still in bad shape. I don't care what anyone says. You can look around and see that things aren't doing really well. But some recent economic reports have pointed to some improvement. But the biggest thing was the Feds. The Feds have opened their mouth and said things about slowing down or backing off of their purchasing of our own debt, which is called quantitative easing. They have been purchasing about $85 billion a month in mortgage-backed securities and treasury debt, and this is what's holding rates down. The more people that buy mortgage-backed securities and bonds drives the rate down. So with the Feds doing $85 billion a month of this, over $1 trillion a year, that's keeping rates down. They recently made comments that they're going to be easing that up. And they should have made comments in relation to as the economy improves, but they kind of put dates on it this last time at the Open Market Committee last week. Anytime there's uncertainty in the market, that results in selling off, and we had a massive sell-off and rates went up. So I think in the short term, we're going to see some volatility. We may see some rate improvement a little bit because we've lost a lot. But in general, keep in mind that rates are going to go up. At some point, that's the only direction they can go. Federal funds rate is 0. You can't go lower than that. So that's where they're doing these other monetary policies.
Thank you. The next question that we have is toward Priscilla. Yes, it's supposed to be Lily Todd, but now it's Priscilla. Priscilla, what are the current trends with purchase appraisals? Because that's the question that
I
always comes up.
think everyone have experienced appraisal issues lately, right? Has anyone not yet? Okay, I think we all know the market has been going upward trend for the purchase price, and the price just kept going up higher and higher. And what happened to our appraisal? It's not catching up as fast as what the people are willing to offer their property, right? So what we're seeing is the appraisers are really appraising the homes based on the true value of that property. But the people putting an offer, they are outbidding that price just to want to get the home, correct? But then there's no comparables available in the market. So we are encountering a lot of value that are not matching the purchase price. And then what happened is again, there's no comparables. And a lot of people arguing with the lender, which the lender has no control about that appraisal value, which is based on the true market value. And a lot of times the appraiser actually put a farm list on the back of the appraiser, or the appraisal report. They actually look at many different comparables available on that market before they even come up with that true value. So the appraisers has been very aggressively pricing the house as close to as what the market is asking for, but yeah, we still see a big gap in a lot of pockets in a certain market, especially like San Gabriel Valley here. I think I covered San Gabriel Valley a lot, Temple City, Acadia. I hear a lot of people just telling me that I try to get this house, I'm willing to pay over $67,000 of the asking price, and which we don't really see that's the actual value of all the comparables in the market.
Okay, moving on. Let's see. And now we see that when we have situations with appraisals, we also have situations with people who actually get into the home. So this question is going to Emily. Emily, what are the benefits of purchasing with a mortgage versus purchasing cash?
Yeah, well, since appraisal value always come in low now, so a lot of realtor would just suggest their buyer to pay all cash. And you guys are missing the following benefits. First of all, the interest that you're paying for mortgage are tax-free. So, you know, your buyer could deduct it from their federal tax return at the end of the year. And also, it just free up their cash. You know, if you have like $500,000, why don't you just invest it somewhere else that gave you a higher return? Also, a lot of realtors are suggesting buyer, you know, just pay cash right now and then you can do a refi. But the things that they don't know is mortgage applied after the purchase intend to have a higher interest rate. So when you do a refi, when you have an equity line of credit or equity loan, the borrower is actually paying more interest rate. Also, I think the realtors are scared of is a couple months ago that when we're doing refi, you see like 2 months, 3 months of closing, and they want it to be done. They want this deal to be done in like fast. We've seen purchase a contract that has 45 days, and now it's all reducing to like 30 days. And then I have realtor asking me, can you close in 17 days? Which is not gonna happen, because a lot of people are working on this loan. You know, we have underwriter, we have processor, we have loan originator. We have the appraisal department, insurance, title, escrow. All these people are working on one loan. It's not going to close that fast. But the whole process has been speed up. I had a loan last month. I took the application on May 21st, and then the docs were sent to escrow on June 11th. So it's pretty fast. It's been speed up. And then I think a lot of lenders has been committed to like 25 days clear to close, or like 30 days. So, don't encourage your borrower to pay cash and get a loan. Thank you.
Hilda, the question that comes up in this particularly in our region, is foreign investors. How are foreign citizens able to finance in the U.S.?
Well, how many people don't know that foreigners can get a loan in here? Anybody? Oh, good. So everybody knows that foreigners actually can get a loan from us. And there's just a handful of banks that do the international loans for foreigners. Some of the countries that we cannot do, but the majorities we can. We have a non-traditional lending for foreigners. Basically, it's not Fannie Mae, Freddie Mac's guidelines. So it's based on each bank's own guidelines to do that. Some are easier, some are harder. For some banks, they only do adjustables. Some banks, they can do fixed rates. It depends on what the borrowers wants. And a lot of people, they don't know how to make the loans easier for themselves. So they just come in and they said, oh, I need a loan, but that's not how it works. The best is to get a pre-approval as soon as possible. For example, we need to run international credit. A lot of people, they don't have that. So we do have to have them to provide a lot of like their credit card information, or even utility bills, or even their anything that they can provide history of their payments, and that takes time. And also their money, that's the major things. Especially we know that from China, they only allow $50,000 US dollars to be transferred out. So it will be a big problem for them to make the money together, and they just put it here, put it there with the parents, with the brothers, or whoever. But when it comes to us, then we don't allow gifts. That will be a problem. So we need them to season them in several months and come back to us. So as a realtors, you need to know how to educate them to be able to get a loan. So if they don't know how to do it and come to get it, they basically not getting the loan. And it's very good for them to get a loan here, because they can establish their relationship with the bank, and also in the future they can also have more money to buy other properties, or has tax write-off in the future when they become a resident. So a lot of good things that they can do, but they may not know how to do it. So ask the bank people to get them know how to do it, and bring them to us, and we can just do the pre-approval, let the loans put in the system, and they can close it sooner.
Chris, going back, we haven't forgotten you, Phoebe. We're going to get to commercial lending towards the latter part of the discussion. What are common problems that you see affecting qualifying and loan approval in today's market?
Okay, there's a couple areas that I've seen consistently become problems for people, and I think, again, education, like she said, in advance, and letting these clients know what to do with their money in some cases would help avoid a lot of problems. Probably the two biggest areas that I've been seeing lately that cause trouble, one is in regard to assets, and that's large undocumentable deposits on the bank statements. Lenders just don't like cash. We want to see that money is in the bank. It's like you can't have cash at home anymore. So anything that's coming into a transaction has to be documented. I often see bank statements with numerous deposits just prior to the month we're getting into escrow, and that's going to cause a problem. If it's a cash deposit, we've got to document where that came from. Cash is almost impossible to document. Check deposits, it's a lot easier, but keep in mind, lenders are always looking at the last 2 months of your assets. So that gives you an idea of what to do with your money. Do things ahead of time so that when we get to the file and we have those 2 months of most recent bank statements, we're not going to have the large deposits that cause trouble in the transaction. So just get your people prepared in advance. If they've got the mattress money, the money at home, the money that families just happened to have cash and gave to them, you got to get that seasoned. So that's one big problem. Second is in the area of income. Lenders in this market are going to be much more conservative than they've been in the past. So if they're looking at trends in income, they're going to look at things like stability of that income. If you have a borrower that for the last 2 years, 2011 made a higher earnings than they made in 2012, there's going to be a question about that and why their earnings went down. And often underwriters are going to be more conservative and just take the last 12-month average if that's the case, because they figure the current trend is down. They're not making as much money. So another huge area that I've been seeing more and more is on the tax returns. Years ago, on a W-2 borrower, we didn't have to have the tax returns in the file as well. So things that were being written off in other areas of the return weren't affecting the borrower. Now, whether you're W-2, whether you're self-employed, we're going to need the last couple of years of taxes. And we're going to look there for write-offs, things like 2106 unreimbursed business expenses. These are expenses that a regular W-2 person can write off because their employer's not covering these expenses for them. That's looked at as a dollar-for-dollar reduction in your income to the lender. So if you've got a guy who's making $48,000 a year, but they have $12,000 in 2106 write-offs that year, that just reduced their income by $1,000 a month. That's a huge drop in income for qualifying. So, and sometimes this write-off is only saving the borrower maybe $300-500 on their taxes. So you really have to evaluate when a borrower is filing taxes, what's the best for, of course, that tax situation, but for the future as well. Because if they write off too much on that, it could really affect their buying. So those seem to be the two areas I see the biggest problems come up on a file.
Over to Priscilla, what are the rules on flip financing, the time period and what is involved with flip financing?
Okay, in terms of flipping properties, the general guideline is if the property was recorded within the 90 day, we usually cannot refinance, but there are special circumstances which a lot of people in this market bought fixer-uppers and then they spend rehab costs or major remodeling, and in those situations, a lot of times if the owner can document the receipt of the upgrade or remodel or the rehab, we usually can refinance within the 90 day. Of course, every scenario is different, but in general, if they can document the receipt and there is a certain range, usually the general rules are between around 30-35% of the increase of the purchase price. And of course, there's certain circumstances that it could go a little higher, but majority of them, if it's within the 30-35% increase and with the document receipts for all the rehab costs and the remodeling costs, then we can usually get it done. And I think a lot of people will be encountering that in this market because a lot of people actually bought fixer-upper. They know how to fix it themselves and then they'll put it back on the market within the 90 days.
All right, Emily, why should homeowners get an equity loan?
Okay. So home equity is basically you're using your house as a collateral and then you borrow against it. Most people use it for either large purchase or their kids' tuition, or they keep it as reserve or emergency use. And there's some benefits of getting a home equity. There's no cost or very low cost. There's no origination fees, and bank will pay for the appraisal. So basically, if you have equity on your house, it's like free money that we can give you. Also, the interest rate is not so high right now. It's at 4 or 5 right now. And there's no season time. So the second day that you buy your house, you can come in and you can get an equity line of credit or equity loan. You don't have to wait 3 months or 6 months. There's different payment options on HELOC. On the equity line of credit, we only require you to pay interest only, and then it's your own option if you want to pay down the principal. It's also the tax deduction as well. They're always saying that the best time to get an equity line is when you don't need it. When you have low debt and high income, you can qualify for equity line because we do check incomes. We often see customers that get laid off and they'll come in and say, oh, I need money, I need to get an equity line. when you don't really qualify. All right, thank you.
Phoebe, over to you. What is the difference between a property investment loan and a small business loan?
Okay, with the property investment, many people right now, I notice that because they probably, pay off the house already, so they wanted to, do some investment, and they would like to purchase later, like 1 to 4 units, and which is, East Bank can offer, the 40% down, just to give you a no-doc program. And that would be investor would be really like that, because you know how they just mentioned that with the tax return and stuff like that, and a lot of people are not reporting the income, the true income. Therefore, East Bank does at this time, I know that you can just only pay a little less, 40% down, then you can get your investment for your client. And also if 5 units or more, and what we call is called apartment loans, okay? So apartment loans also many people like to be invest because right now I think rental people are, the renter still are in demand. So therefore it's good to have and to recommend a client to buy apartment loans. Again, because I'm a loan officer here, and we do offer a investment property for apartment loan for, again, 40% down, up to $2 million, and also stated income and verified asset. And also we do foreign national. Okay, with the SBA loan, I want to focus more because today's economy that a lot of people like they have their own business and they want to find out whether they can own their own property, or they just maybe after 2 years if they start the business, they realize that they need a working capital. So we can do that also. I have a really standard form that I can pass out later, and what's all about what's SBA. SBA have 2 programs. One is called 405 program, and one is 7A loan program. I don't want to be too details because of time. Basically, for SBA loan, why SBA loan is fully amortized and no balloon payment, flexible term, finance for unconventional and special purpose credit, business acquisition and expansion. We can do a gas station, car washes, restaurants, healthcare facility, hotel, motel, auto shop, and more, and also constructions. But bear in mind, this all has to be owner occupied for 51%, meaning owner usage and owner operating. Okay?
So I hate to interrupt, but just so that we can get clarity, when you're lending for a business loan, these are the certain qualifications.
Yes, for SBA loan,
for
small
business
business administration, SBA. And also, you can have little, only about 10% down, and the term is 25 years term. You can, not like in the commercial, regular loan would be 5 to 10 years term, but with this SBA is 25 years terms. So it's lower down payment, no balloon payment, and it's a very easy financed. Make sure they have provided us a 3-year tax return and current personal financial statement, which is our form, that we can give you about 48 hours, 72 hours turnaround time, so you can actually call a client for that SBA loan, okay? So I know it's going to be a lot of questions, and you go, welcome to call me. I'm at, 7-Eleven, okay? And my fly's right here, so I'm going to pass out later, okay? That's about it.
Perfect. Hilda, one last question now. I know that we had said we were going to ask more about the foreign stuff, but I think we haven't heard it addressed in the panel discussion. So if you could tell us how are refis going these days, and what are the qualifications, and how are people able to qualify for refis, or if there's any trends in refis that are happening?
Yeah, it was really, really hard for the last several years that we did very, very well. And just recently, because of the interest rates, it just came down a little bit. But basically, for getting a loan, there are 4 elements: credit, asset, income, and property. We can't do anything with the property. The property is something that we as a lender, loan officers cannot do more besides just getting the appraisal back. But for the customer, the credit, a lot of people, they don't know, a little bit will hurt. even $20, $25, it will hurt. So people say, I don't have any debts, I pay off every month. No, this is not, because you still have a minimum payment in your credit report for that $20. I just recently struggled with a loan that the person is a businessman, and he just used his company's business card for his business, but it's showing in his credit report. And it doesn't have 12 months demonstration that the company is paying for it, so it hits him on the ratios. And we struggle and then pay down something and allow him to pay down the loan. And we run the credit again because it's over 90 days. So we run it and then it pop up with another $28. And $28 can go up for about $6,000 for him to pay down the loan. So it's another struggle. So it's a little bit that you will, it just come back to hurt you. So make sure that the customers, if you let them know, don't use that much credit card, don't consolidate them, don't have that many, because one card is 100, another card 200, but everyone is $20, $20 here, $20 there. So credit is very important that you need to get them consolidated. Second is income. Some people, they don't know that their kids come out from the college and right away they can get a loan. Yes, they can, because they get a higher education that can compensate with the supplement with the 2 years employment. And people, they have a job change. If they don't have a first pay stub, they cannot get a loan. So if they change the job and then 3 months later, like a teacher or whatever, they started in September, they can get a loan now because they don't have a pay stub. So something like that, you need to realize that make sure that you have to educate them before they come to buy a house, otherwise they will screw up. And also finally is the, I touch everything, right? The money, it's just like what he said, is the large deposit is very important. People, they don't know that a little bit money, over 25% of your income, say if you make $1,000, if you put in $1,250, then the $250 you have to explain. So make sure that if you we need to see 2 months bank statement. So within the 2 months bank statement, if you see some large deposit, make sure that they know where the source comes from, and to make sure that they can explain it. Yeah.
Perfect. Well, the only last question that we have, because we do want to open it up for questions and answer, a Q&A session, is if you could tell us briefly, Phoebe, what is the present, how is the present economy affecting business lending?
I think as many of you know, now economy is actually still for employment rate is still double digit in California. So you know, actually the economy not as you think is good, but it is improving. Okay, so I think as far as a commercial, right now a lot of big business people out there are anxiously do loans because the rate are actually record low. If you notice it. I remember that a few years ago that the commercial loan can got me to 6 or 7, 8%. Right now the interest rate are at lower level for a lot of commercial customer looking for either refinance if they have the commercial property, and also if they were selling more now because of the the Chinese trading and stuff like that, and they're looking also for a what we call business line of credit that our bank is offered that also. So I think more and more, if you guys were looking interact with the customer that is commercial and a business, then you really want to approach them that because of this record low interest rate. They might want to buy a commercial property, and for the business, warehouse or even whatever they need to use for their own business. So I think right now, because the economy is actually helping actually for a lot of business people, business owner. Therefore, I think it's really a good time for any one of you to see if your customer are interesting on that commercial lending. And remember now, once you have that customer, you have it for life, because they trust you for your professionalism and what you know and how you can approach them. And they'll be friends for you forever. And also they can refer all your friends for you too also. So utilize this perfect timing to know more business people and find out their needs. Sometimes they really turn away when you talk about loans, talk about things like that. But if you get to know them personally and find out their needs, and they can, you be really the big asset for it. So I like to encourage everyone here that can able to really understand, for your clients what their needs are, and it can help them greatly. And as I'm available for you, you can always call me anytime regarding commercial loans.
Thank you, thank you. Now we're going to open up to some questions and answers.